Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.
Tonight, the White House is now saying a booster vaccine may be needed. Will businesses be requiring proof of that one too? Afghanistan falls back into Taliban hands. And federal prosecutors are charging Netflix staffers with insider trading. I think Netflix just found the plot for their new series of House of Cards 2. That and more tonight, all on Wall Street Wrap-Up. Hi, and welcome to Wall Street Wrap-Up. I hope your week went well. I'm Andre Laborde. Our goal is bringing Wall Street to your street for today, Friday, August the 20th, 2021, and to get you ready for the week ahead. Tonight, we're going to be talking with one of the largest developers in the New Orleans area, Prez Kabikoff. Prez is the executive chairman and co-founder of HRI Properties. HRI not only developed many New Orleans developments, including the New Orleans Warehouse District, as well as hotels and apartments. His company has projects throughout the United States, and we'll be discussing with Prez real estate, the economy, home ownership, and much more. But first, how did the markets do this week? Well, the Dow Jones Industrial Average ended the week at 35,119, up 225 points for the day, but down 1.1% for the week. The S&P 500 closed today at 4,441, up 35 points for the day and down 0.6 of a point for the week. And finally, the NASDAQ. They finished the week at 14,714, up 172 points for the day and down about 0.75% for the week. And back this week, Goldman Sachs raised its price target for semiconductor AMD to a buy at $130 a share. Well, my guest this evening is co-founder of HRI Properties and is now the executive chairman of that company. HRI has developed over $3 billion in total developments of hotels, retail, and residential properties. Prez Kabikoff is my guest, and he's with us tonight. Hi, Prez. Welcome to Wall Street Wrap-Up.
Nice to be here. Thank you.
Oh, so happy to have you. Prez, you're a good barometer and indicator. How does it look for the remainder of 2021 and heading into 2022 with all this COVID-19 and Delta that we've been hearing about?
Well, let me just say, if I was certain, I'd be lying.
Welcome to the club. Yeah.
That's an amazing thunderclap that just happened over Louisiana rain, but we were pretty optimistic at HRI. You know, we have hotels around the country and in many cities and a number in New Orleans as well, and so we're very carefully monitoring the national and the local scene. And before the last several weeks, we were surprised and that the market nationally was outperforming the expectations. And now that this Delta D has come along, we're obviously, like the rest of the country, a little cautious because you just don't know. That said, the general mood is that we will get our arms around this. The country will come to its senses and, for the most part, get vaccinated, given the fear, and we will be back on track to a recovery in certainly by 2023, and we had earlier anticipated hitting about 80% of 2019 in 2022. Whether that gets interrupted now with the D variant, well, we'll just see.
Sure.
But I think generally the market is, at least the financial markets, the investors, the lenders, et cetera, are, are feeling that we'll get our arms around slightly downward on their projections, delaying it slightly, but uh, not figuring that this is a showstopper. So there's still a lot of exuberance, I think, in the market. Lots of monies are chasing deals. Uh, there's not a lot of new development, a new supply, because lenders, construction lenders, are unwilling and to venture out. So that will take a little while, and maybe that's a good thing as the market uh, uh, gets back.
Well,
Uh, we're we're
I'm
actually
curious.
looking. Go ahead.
No, I was just curious. Real estate normally is a great hedge against inflation. And we're seeing inflation right now around the country going up. And with real estate, and your business is real estate, when it comes to lenders, is with low interest rates, is this a good time for companies as yourself to go ahead and to look at different projects that you had on the board?
Well, there are two levels. It's buying hotels, if we're talking about hotels now,
Mm-hmm.
or developing hotels. Developing hotels is more difficult because you're not going to be able to get construction financing. Although there are a few markets in the country, we're in Nashville now, that's pretty exuberant, and Austin, although Texas has been hit pretty hard the last couple of weeks, but Austin was doing quite well, that you might be able to develop. You're right, though, there's lots of money chasing deals, and much more money chasing deals uh, than people are willing to sell at this point. And the prices are actually in good for outstanding real estate, uh, at or above pre 19 levels. So that
Mm-hmm.
lets you know that the financial markets are still have optimism, or have optimism about the rebound of the hotel industry.
It's interesting. So, is it more cost effective for a company such as yours to take over an existing hotel than develop a new one from ground floor up?
Well, it's different than that. If you're in the hotel business, the hotel development business, you develop, build, and then own, or you buy hotels.
Mm-hmm.
And right now, it's very difficult to develop. You can't get construction financing, and hotel occupancies obviously have been down because of COVID. And so lenders and investors are not anxious to see new product. And so, if you want to continue with your staff and be exuberant and moving forward, you really look at acquisitions and try to find a deal. And if you find the right kind of at the right price, you could actually do better than you could in development. Uh, uh, but there's lots of money chasing deals, and there's lots of competition. Our focus is really on quality urban assets, and we're in a whole number of cities. So we're looking countrywide for acquisition opportunities, and had the financing available if the deal's right.
I understand. Yeah, I know. I know. Sometimes with the summer is really big for tourism, for travel, for vacations and such. Did you notice with us being in a lockdown for so long and then heading into this summer, were your hotel properties at least seeing an upsurge? And now that summer is getting over with, what do you see for going into the fall?
Well, the fall's a great time for us. As you know, the New Orleans, the best markets actually are the fall and the spring, and
Mm-hmm.
and summer struggles a little bit. But right now, uh, given the difficulty in flying and the rest of it, it's drive-in business, and we're finding during the summer that our hotels, because of the tourist crowd, not necessarily the business or the convention crowd, have been filling us up on weekends. And then, since business is slower to come back, although some businesses are combining business meetings with pleasure, and so we're seeing some of that. But businesses are slower to come back. New Orleans market during the summer has been sort of way off during the midweek. As we look forward, countrywide, nationwide, there's a level of optimism by the best thinkers. Although New Orleans, as you know, we've just canceled the
Jazz and Heritage Festival, huh?
Jazz Festival, and likely to cancel the French Quarter Festival. I can well understand why they did it, but and so the fall is unlikely to be as exuberant in New Orleans as it would be in other cities. Your major conventions are the slowest to come back, but they will. I think I was always concerned that there would be structural changes in the industry as people take pleasure in staying home, as I did quite often. And businesses would say, I don't need to send somebody to the West Coast to watch a PowerPoint. That business travel, but my people tell me that are in the field and talking to people that people are very desirous, particularly the tourist, of getting back on the road and visiting, and as well as businesses just frustrated by not visiting people. So I think there's optimism unless some nation finds a Delta E. And then we go back around. That's what you say. You just don't know yet.
That's a very good point, Prez, because last week we had Oscar Munoz on, and Oscar was the CEO of United Airlines. And I asked him that question about, is there a concern, because he's in the travel industry with United Airlines, as with yourself. And are too many employers now going to be thinking about keeping their people home and using Zoom or comparables like that with video conferencing rather than going ahead and sending? And he was saying how, well, plenty of times with especially younger account reps and such, you need to make those one-on-one clients and see those people and being able to develop those personal relationships as compared to, say, the account rep who's been in the business for 20 years, 30 years. It's already developed those relationships. So I question, I'm hoping that there will always be that need for getting on any mode of transportation and traveling, staying at that hotel, going to those business locations, a Memphis, Nashville, New Orleans, or any Chicago, and keeping those business contacts on a personal level. Do you think?
Well, I'm not going to outthink the chairman of an airline.
Well, you're the chairman of HRI. That's just as good as far as in my book, Prez.
Well, I think he's right. I do think there'll be some structural change, but there are pluses and minuses with the Zoom. The Zoom allows you to stay closer to your people, and that could generate actually more activity. And the fact that you can do things on Zoom would create less. So I think there are signs of encouragement and discouragement, but we just don't know.
True. And also, is like what you brought up before earlier, is that when it comes to business conferences and business conventions, I would assume that when they make a plan for this, that this would be for like not a 6 months in advance, but a year in advance, or maybe even 18 months in advance. Would that be correct?
Yes. Your big conventions are advanced 3 or 4 years ahead of time, and they have been impacted. That'll be the last. The large, our convention center, will be the last to see a recovery. We do have some good things though. We have the Final Four in 2022, Super Bowl in 2025. We've got this new airport, improve the VA. We have lots of things that'll add to our ability to attract tourism, and so I think New Orleans will struggle. Obviously, the the intensity of our infections here are some of the highest in the nation. So Delta will not be good to us, but longer term, I think New Orleans is going to be will return to becoming a robust market.
I certainly hope so, and I agree with your thoughts on that. Prez, what about, I know we talk about hotels, but what HRI Properties is also very much is apartment complexes. And with first-time home buyers, plenty of times not being able to, with home prices are so high, many first-time home buyers are not able to get that first-time home, so they're renting. Are you seeing an influx of apartment renters during this time of the year?
Well, we had an initial fall off, but our occupancies are coming back. The great need in the country, and particularly in New Orleans and Louisiana, is for affordable housing. Mm-hmm. Like hotels, it's difficult to find financing for new construction. But the need for affordable housing is so deep that we have a division at HRI. We've been doing that for years. We call it Communities, which focuses on developing affordable housing developments in and around New Orleans and around the state of Louisiana. That requires a subsidy. The subsidy is called the tax credits, and there are bond programs. The tax credit is limited. There's only so much credit available, and the bond program is unlimited, but it takes additional subsidy on top of it to make it work. So it's a complex, different area to develop in, but we have done a good job, and for the most part can attract the financing, and that's where the deep need is. Your first-time home buyers are having real problems now. They just, with your home prices going up dramatically, and new construction with the price of materials and the shortage of labor is very difficult. And so for the most part, your first-time home buyers are struggling to land, and that's a national issue that we need to pay attention to.
In fact, that's a good point. Tell you what we're going to do, Prez, we're going to take a break right now, but when we come back, I'd like to pick up where we left off, because you're talking about the struggle for materials, and I'm thinking of lumber and other things that are so high, and that also goes into your other areas of when we talk about development of hotels. We're talking right now with Prez Kabikoff. He is the executive chairman of HRI Properties. We're going to take a break, and we'll be right back. Welcome back. We're talking with Prez Kabikoff. He is the executive chairman of HRI Properties. Before going to the break, we were talking about with inflation costs with lumber and other things. And Prez, I know when we first started off, we were talking about the hotels and developing of that, but also when it comes to residential and talking about home buyers and the costs are so high. Are you seeing that this is causing a problem in your area? And I'm talking about either whether it be developing of hotels or developing of new apartment complexes with the cost of materials to be so high?
Well, you have two obstacles. Mm-hmm. Your occupancies in hotels and residential were hurt by COVID, and they're coming back. Mm-hmm. That makes lenders, construction lenders for new projects, very cautious. So finding the financing is difficult. Secondly, as you point out, I hope it's temporary. I think Powell from the Federal Reserve thinks it will come back. The inflation that we see is a very complicated subject, and the elements that are driving it will calm down and we'll go back to the 2% area. We'll see. That's what the Federal Reserve is contending. But right now, your lumber prices, as you pointed out, are not. I think they've peaked. They've certainly peaked, and I think they're coming back. But they had gone so far up that the cost of construction is very expensive. So the combination of inability of financing and cost of construction has discouraged new development. As I told you before, the greatest demand area is in affordable housing. And so there are programs that are available to help you do that, but they're limited.
Residential and apartment complexes. The Biden administration just extended the moratorium on evictions until October the 3rd. Well, you're having apartment complex and you rent apartments out. Is this having a negative effect on your business with this moratorium on rents?
Not really. I'll have to check with my people on the latest information, but there was a lot of money sent to the states to it actually would go to landlords to pay back rent and allow tenants not to be evicted. That has not been distributed. It was I just don't think your states and your cities were organized to distribute some of the stimulus that was sent out in the time that was required, but they'll get around to it because they've got the money, unless Congress takes it back because it hadn't been spent. But there's a great need there. Obviously, the tenant gets hurt if they get evicted, and the landlord gets hurt if he doesn't get the rent.
HRI Properties is a private company, but there's a lot of businesses that in real estate that are going from private to REITs. A REIT is, for our viewers, is a real estate investment trust. And you not only can be a publicly traded REIT that is publicly traded over the New York Stock Exchange, but also even a private REIT. Have you thought at HRI Properties of going as a real estate investment trust?
Well, we've looked at the capital markets for anything that would improve our cost of capital, including going public, including SPACs and merging and et cetera. But that's a very complicated world and very expensive to enter, and it depends on the timing. You couldn't have touched a hotel REIT with a 10-foot pole a few months ago, and now it looks like with the market is feeling stronger, the REIT market has probably got value again, and you could take a look at that. So we're always looking at that, and so far we've not gone that route.
I understand. It's interesting you brought that up because we were talking earlier about lines of credit and such. And I know when you're a publicly traded company, that opens up sometimes more lines of credit than as a private company. And you even brought up about SPACs. And for our viewers, SPACs is a special purpose acquisition company, which is another way for a company to be taken public. Question for you: one of your, I guess, your contemporaries, or maybe one of your competitors is Barry Sternlicht. And Barry has hotels and such, and he's developed SPACs as well besides. So you have looked at that as a possible way for HRI Properties?
We've explored everything.
Uh-huh. Leave no stone unturned.
We're always looking, and we've taken some runs at it, and then the market changed, and we backed off.
You've got the line, elevating the urban experience. And you've talked about the urban areas where you're developing. Are you exclusively in the urban areas? Are you primarily in the urban areas? What are your thoughts about today and the future for HRI Properties for that area of the urban
Well, I got into this
experience?
business in 1982. Started developing in 85 and in 86, when cities were in trouble. Flight to the suburbs left cities and their historic buildings empty. And so there was an opportunity to revitalize center cities across the country, which was not only a good financial opportunity, but it certainly helped communities. So that's a nice thing to do in business if you feel good about what you do and you can make money. There is, to some extent, a move to the suburbs and smaller towns. Uh, we really like to influence the health of a community, and so we've been focused on urban centers. That said, if you could help a fat city, just to use our area as an example, and do a dramatic development there that would be good for Jefferson Parish, then we would look at that. But our focus has been urban centers.
I understand. Well, every good entrepreneur sees a need and tries to fill it, and you're certainly one. I've always enjoyed your op-eds, and whether it be in the local papers or talking to you, and I've always learned a lot. Prez, thank you for joining us for Wall Street Wrap Up.
Appreciate you calling me, Andre. Bye-bye.
Thank you a lot, Prez. We appreciate it. Well, if you've got a question about finance or a comment about the show, we'd love to hear from you. You can write us at andre@wallstreetwrapup.info. Keep it pithy or concise. We'll be glad to answer your questions. And now for a look ahead for next week. But first, on August the 18th, 2004, what popular company went public not as an IPO, but as having bidders compete for a price? Now, we'll have that answer in just a moment. On August 18th, 2004, 17 years ago yesterday, what company went public not as an IPO but having bidders compete for a price? Google. It opened at $85 a share, closed that day at $100 a share. 17 years ago yesterday. In fact, a $10,000 investment 17 years ago would be worth over $400,000 today. Well, in the weeks ahead, we've got some great guests. We're going to be talking with the publisher of Forbes magazine, and he's chairman of the Forbes Communications, Steve Forbes. Also, coming up in September, we'll also be having the president of the National Urban League, Mark Morial. I think Mark had something to do with the city of New Orleans, too. Well, that's coming up. And next week, we're going to be talking with economist Steve Moore. Steve, in addition to being former member of the Wall Street Journal's editorial board, writes numerous columns and books on finance and the economy. Steve was also an advisor to the Trump administration for the Tax and Job Cuts Act, better known as the Trump tax cuts. Steve Moore will be here next week. And remember, we also repeat the show on Sunday mornings, but the best way is to set your DVR so you'll never miss an episode. And that's our show for Friday, August 20th, 2021. I hope you enjoyed it. My thanks to Prez Kabikoff for joining us this evening, and my special thanks to you for allowing us into your homes tonight. Remember, you can always follow us on Facebook and WYES.org. So have a great weekend and an even better week ahead. I'll see you next week for Wall Street Wrap Up. I'm Andre Laborde. And remember, money never sleeps. Good night.
Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.